And as always, you're alive and blessed. In this session, guys, we're gonna go on the chart. In the two previous video, I show you guys how to understand liquidity on the line chart, but that's all fun and all. But when it comes to the chart, it's a whole different ball game. Guys, I'm teaching you guys how to trade liquidity on a bullish market, even though prices on a bearish market. And even though prices on a bearish market, we're gonna still trade on a bullish, because guys, liquidity is not really a trading strategy by itself. Liquidity involves order blocks, supply and demand, breakout structure, and market shift, guys. So even though we're gonna trade liquidity on a bullish market here or a bearish market, because as a scalper, you guys can catch in and out even though market is doing whatever. Because end of the day, we don't, as a trader, we don't care if price is on the bullish or bearish, because why? We understand and we gain a wisdom of what the market is doing and what we're looking for. So as always, we draw our supply zone, which is the key level, the highest level, our demand zone, and our extreme demand zone. As you guys can see, what is at the extreme level? A fat ass order block. So we guys know what is the order block by now. Price is gonna always respect an order block. So as you guys see, price went up here, formed this fat ass order block. It went up, formed a higher high, came back, formed a higher low, which right here we dropped the demand zone, and price lead to a what? Breakout structure. And we know every time price lead on a breakout structure, we want to wait for this particular candlestick here. If this particular, I teach you guys this already. If this particular candlestick here was to break past this supply zone, this supply zone will become worthless, because it would have retraced to an extreme supply zone. But price respected this supply zone by closing with a wick lower, and the previous candlestick closed lower than that. So what we guys want to do now, we guys will come here, take our short, and we will put our short right here. Since we have no extreme demand zone on the top, since we identify it's no extreme supply zone, we understand price is going to respect the supply zone because it closed inside the supply zone. So we will put our stop loss to the next order block, because like we said, price is going to always respect an order block or a demand zone. So even though you guys trade the put here, right, what you guys could have done, since price came back, see, but on vice versa now, here we go now. You see, guys, you see how price respected this supply zone by closing inside the candlestick? Vice versa, on this demand zone, price disrespected this demand zone by breaking past it and created a next candlestick that was the extreme demand zone. And get an even extreme demand zone, we will put one down here to our extreme demand zone, right? So how you guys enter the trade here on an extreme demand zone, you guys could have wait, and you guys are a scalper, because as a scalper you can catch both trend of the market. It don't really implement to you guys, even if it's a bullish or bearish, because as a trader we're looking for opportunities. So we see price disrespected this demand zone, so you guys could pretty much delete this demand zone. And price, see how price touched it right there, guys? If price was to disrespect this demand zone, price would have came back down and disrespected this demand zone and continue forming lower lows. But what price did? Price respected this extreme demand zone by not breaking past it, and you guys could have taken your long and even long it there. Even though this on a bearish market, we take a call. Ain't that some shit? But it be life, and just so that they play out. Now, even though price came up to form, now price came up here to form a new higher high, right? A new support level. And guys, this is where it all comes to play. So we already took 2 trades. Now we could even take a 3rd trade by identifying here. See how price respect this extreme demand zone and continue well to form a higher high, higher low, higher high. Price came back down, form a higher high. A swing, guys. Remember, on top of every swing, if this price here was supposed to do its job, from here, price would eventually, from this candlestick right here, price would break past this previous high to continue forming higher high. But guess what price did? Price failed to and came back down and grabbed all the liquidity. Because guess what, guys? This was a swing high, also a flip switch, also the liquidity. Because look, this one candlestick here came back up and sweep all the available liquidity on top of the swing high before pushing price back all the way down. So we would come here again, guys, and we would take a short. So there's 3 trades on one chart. Even though this on a bear market, we got 2 put and 1 call on, just like that, guys. Just like that. You see that, guys? Let me zoom out so you guys could see it. Take a screenshot, guys, because these chart pattern, it's normal to happen. Just take a screenshot, guys, because every time. Quick recap: liquidity is not a trade by itself. It involves other supply zone, demand zone, swing high, swing low. And on the bearish market now, the swing low would be an opposite, and price is gonna do the same, guys. So as always, guys, matter of fact, I hope you guys take a screenshot of this. As always, stay blessed and mind your business, guys.